Hey traders, what's happening? Jamie Saettele here. It's Friday, February 18th, 2022, and this is the FX Power Hour with me, Jamie Saettele, Scandinavian Capital Markets and SB Trade Desk. So let's begin. Same old song, folks, with the dollar, DXY, that long-term trend line, 10 years, 10, almost 11 years, back to April 2011, and we've been pressing against it. Nailed it twice, right? November. Really, this, what I think is a topping process, has been going on, for, well, about 3 months here. November 24th was a high, right? We came back, kind of thought we had the top end at that point, came back, surged back at the end of January, and what proved to be a kind of a bull trap of sorts. And now we're kind of in limbo, right? So, if we zoom into this, kind of try to get an idea of the structure of this decline to me, is it like perfect? Like, does it just stick out at you? And oh crap, I forgot to show the screen. That would help because I'm talking about these charts. All right. Sorry about that. Okay, so we should be good now. And here we go. All right, so yeah, this is that chart we've been staring at, right? Nearly 11 years that this trend line's been in existence. And let's go to that short-term chart that I was talking about. So again, sharp decline. Could very well argue that it is a 5-wave drop, right? Bottom line is a sharp decline. Now from that point, and I'll show the opposite here in a little bit with Euro, right? The inverse of this. But to me, this is also kind of a 3-wave advance, right? A, B, C, if you will. Now, if we look at the retracement levels, we didn't quite retrace 6.8. That's fine. You don't have to do that. But we could have some sort of a complex correction. I mean, really, bottom line here is we are in limbo and just waiting for clarity. Really is where we're at. So, if I look at, say, Euro, as I mentioned before, I kind of have that drawn out here with what I think is an A, B, C, right? It's a big flat correction. And so I am thinking higher, again, tentatively, in his confidence, the highest it could be. Probably not. I mean, we've been really going nowhere here for a while. Really, and aside from all the news out there, right? I mean, you've got all this, Russian, Ukrainian news, obviously European centric, and Euro hasn't done much this week. In fact, we are like unchanged, I think, on the week, and we've moved about 1% on the week. So not a whole lot going on. But again, I do hold a constructive view on the Euro, primarily due to that long-term trend line here, right? Which we reversed from the top, or the top side of that trend line here back. And that spike, that dollar spike, Euro spike down at the end of January, right? It's also, we talked about this, but a weekly reversal support. Talked about this over the last couple of weeks. Take that low week back from March 2020, draw a line on the close, and you get yourself that 111.32, which is pretty much where we bottomed. So still thinking higher, if you will. Another reason to just, think that if we are higher, it probably needs to be from here. Otherwise, it's going to be quite delayed. Is you see this thick line. This is 2022 volume weighted average price, VWAP. And I don't know, just like to see us move higher off of it. That's about it. So again, not a lot of confidence in this, but did want to point it out. Okay, US dollar. Now this chart, your all clear dollar bearish signal probably doesn't occur till you break this red line. So you've got a very clear signal line, right? So this is kind of where I am checking every day and night, because we've held it several times here, including last week. This week, again, very quiet. And we need to crack that. Once you crack that, then I think you can, kind of off to the races in terms of the dollar in general, or to the downside, right? Off to the races for FX, notably G7 against the dollar. So this is what I'm watching. And again, if we go to zoom in closely, you can see that kind of impulsive drop, flat ABC. If it ends up being kind of a complex correction of sorts, we could trade all the way back up here, right, to that, former resistance back here, 12.2, 12.260s or something like that, and really make this a diabolical type of sideways corrective move. So, I do, again, am of the mind that dollar's been topping and is topping, but in terms of the next trade per se, it is not especially clear at this moment, and it won't be until we break this trend line. Okay. All right. Dollar Swedish krona. Again, holding up quite well. Kind of still stuck on this wedge-like formation, right? We had that big spike, again, that January spike, and we nailed that high from June of 2020, came within ticks of the 618 retrace, right, of the drop from March 2020. Sliced right through this line here, crosses highs from August, and you can see the contracting nature, right, of this pattern. So much like, you've got that US dollar trend line, which is very clear. Dollar SEK, again, very clear in terms of where the big breakdown level is. Until then, it's like holding a balloon underwater, and it continues to kind of hold up. So yeah, focus your attention on this line, along with probably with that former resistance there around 918.30. All right. Okay, now on the other side of the dollar, like, what if there's dollar bullish, setups out there? Then take them. One is right here, and this, I try to be as objective as possible when it comes to my analysis and trading, but the key word there is try, right? I am a human being, and therefore I am going to have biases. I am going to have a subjective bias, right, in my analysis. It's impossible not to. Okay. I need something to kind of make sense to me, and I hate that. I try to follow the pattern and the rules, but even then, pattern recognition is subjective. I try to follow the rules, and triggers and everything like that, and forget everything else. But it's hard to, right? So in the case of dollar NOK, this can make sense to me on the long side, frankly, because of oil, and I kind of holding a bearish view here on oil at these levels. So, NOK is a is a petro currency, right? Norwegian krone. So long here is kind of a synthetic bet on short oil. And I like the setup. I mean, you've got a beautiful bullish fork back to the April 2021 lows, and it is a thing of beauty. The lower parallel is held absolutely gorgeous the way this is held, right? 618 retrace right off of that. We are now cracking the line off of these highs, so you could very well end up with a solid breakout. By the way, just on display here is volume weighted average price, kind of textbook action here. So look at the highs, right? Volume weighted average price from the March 2020 high was resistance. Volume weighted average price from the April 2021 low was just support several times. So this is a good visual on how to kind of use volume weighted average price to estimate support resistance. And it's even better, of course, when it coincides with, another technical measure or, technical method, such as a pitchfork right here. Guriel asks, what is a tunnel top? That is a question I cannot answer because I have no idea. I do not know what a tunnel top is. Guess I could try to Google it, check it out. But yeah, I'm not sure. Hold on here. I've never heard of it, actually. Yeah, tunnel top. I've never heard of a tunnel top. I'm not sure. All right, moving on. So let's go to cable. Looking like we've got a little dollar spike here since I started this webinar. Let's see where we are. Certainly we do. A little bit of a pop. Or more of a risk off type of move. Hold on, where was I? All right, so British pound. All right, so British pound. This is actually a trade we were involved with earlier this week. And we did take a long yesterday at 35.60, and we did bail out yesterday at like 36.20, just kind of hit and run. That's the kind of market that we're in right now. Which is another thing, I guess, about, kind of trading philosophy. Look, it's tricky. Like the setup here, I'll just go through the setup, but like the setup is one, I think we are in some sort of like an A, B, and then ripping higher in a third wave of the sequence, right? So it's either a third wave, which we've got a lot higher, or it's a C wave or whatever. Either way, it's the third leg within a sequence from the low in December, right? And British pound has kind of been leading. It's another reason to like this, right? I mean, the low, again, the low is in December. The dollar high, DXY, and, in euro dollar low were in January. So again, cable's kind of been leading it the way. So it would stand to reason maybe that if indeed we do have, a dollar topping process, that British pound would lead the way and, enjoy its leg higher, possibly a bit earlier, or at least, break the highs, right, and kind of confirm the dollar, what we're thinking about the dollar topping process. So again, this is all conjecture. I don't know. I can't predict the future. However, if you look from here, very clean impulse on the way up, right? I mean, very, very clean. So, right, clean 1, 2, 3, 4, 5. And then we had this diabolical flat ABC, ripped higher. We've got a pretty solid channel to work with, right? This is what you kind of want to see, is banging against the center line of the channel. That really confirms the channel, its existence as legit, makes it what I like to call operable. Confirms that you're working with maybe the right slope of the move, right angle. So we rally, we take a long back through the 25 line, fine. Okay, and so far we've failed. We really haven't gone anywhere this week. So bottom line is I am looking higher towards two legs up, which would coincide or intersect with that upper parallel up around 139.50. Okay. Now, for all I know, this whole thing is wrong and going to fall apart. I don't know. But the conservative way to play this, if that's your style, would be not to trade the long side until you break above this center line, which would mean you're breaking resistance because it was prior resistance, right? I know I beat this drum all the time and I talk about it all the time, but support resistance is not just horizontal like this, right? Support resistance oftentimes in markets exists on a plane, right? Or a channel. And that's what I focus my my analysis on a lot of times, right? So is trying to identify, if you could think of one thing, it's about trying to identify not just the direction, which is kind of important, right? Up, down, or sideways, but also the angle or the slope with which you're trading. That way you can get precise entry and exits. Okay. In fact, just go back to that dollar knock chart. This is a great example of that. Oops. There we go. So this is a great example of that. So you've got this fork here. Again, this isn't going to be confirmed or really valid until you trade it up here near this center line. Okay. Once you pull back, you're looking for support either on the 25 line or the right here. So you have an idea that the trend's up because you confirmed it with the channel in the center line or the median line. Same thing. And now you have an idea that this is support because, again, this was confirmed. So this is a good, perfect textbook example of using slope, right? Using pitchforks, or channels, what have you. Market's trading on a plane. All right. Okay, where was I? I just went into education mode, and I was supposed to be giving a webinar here. All right, let's see here. We were at British pounds, weren't we? Yes, we were. Go to some commodity FX here. Okay, we've got a beauty in terms of Aussies, the 4-hour chart. And we've got real clean barriers right here, right? So trend line back to October. Failed at it last week. That was last Thursday. And we failed at it the last couple of days, last 3 days actually here. We've been trading around it. And again, another great example of center line action here. So you've got failure at the center line too. In fact, we failed there this morning. What did we trade up to? Like 72.25. So a couple places to watch for support. Okay, one is right here, 25 line, which is like can be 71.30, and that's where we open the week. It's actually where I am long from. Right, so right there, and the other one's all the way down here, which would be a little scary, right? That's going to be all the way at that lower parallel close to the lows. So again, the conservative kind of look here, trade here, is to trade the long side if you break back above this. If you break above it, it's probably resistance up here. You pull back, and that should be support, and then you go on your merry way. And the big test eventually for Aussie is going to be that line from Feb 2021, which is up here. Okay. It's going to be near 74. Depending on when you get there, call it between 74 and 74.5. All right. Kiwi's very similar. And this is actually one I think to watch closely because of the current setup. Oh, real quick too, sorry. I'm going to go back to Aussie real fast. So again, the reason that I kind of like Aussie higher here is the fact that this is that November 2020 low, and we have come into it several times here over the last couple of months. So you've got the December low, you've also got, the Jan low. We've rejected this twice now. Okay. So really, I did this thing, the trading battle last week, actually, with Ryan Littlestone. And one of the things that we actually had a lot of things in common in terms of how we look at markets. When I think he's been trading for like 30 some years or so. So like, the guy obviously knows what he's talking about, is that support is support until broken, and resistance is resistance until broken. I always love to say that. I think he said it basically, a level's a level until it's not. Same idea, right? So point being is that, here's that on display. This is support, right? And it's support until it's not. So it's support until you break below it. I like to think of it that way. I think it's a great way to think about it. So keep that in mind. Okay, moving on. Kiwi. So we have this very, sharp angled fork, which therefore might not actually be the right thing to follow. But we'll just get rid of it because it doesn't really matter at this point. Got the same levels. Go back to just scroll out. So again, the channel line here back to March. Okay, the crosses, the lows, March, August, was support back in December. You can see here was little minor support in January. Then we kind of failed, bear trap right below it. Basically, watch that for support again. I know there's some folks out there that once kind of a trend line's violated, they get rid of it. I don't, especially if it's been extremely precise and clean before it was broken, because a lot of times it will come back into play. I can show you countless examples of that. In any case, 66, 35, excuse me, 66, 30, 66.50 is going to be your level that you want to hold if, if indeed Kiwi is higher, okay? And again, other reasons to like this higher, or at least think that this was a big low back in January, is the fact, and we've talked about this, that we've got two equal legs down. So right here, ABC, okay, ABC, ABC. So it's a triple 2, okay, or a WXY correction, right, in which each leg is each leg is corrective, okay? So rather than ABC, and again, this is semantics, really doesn't matter. Bottom line is you have two patterns connect and they equal each other when measured, okay? So that's that. So yeah, looking for 66, 30, 50 support, and then looking higher towards 68, 60, which is clean as they come in terms of levels. Right here, connect that high back in 2020. See the little dashed line, support, resistance, resistance. It will be resistance again unless it's broken, just like we talked about, a level is level until it's not. All right, let's go to dollar CAD. Dollar CAD, so while Aussie and Kiwi do appear quite constructive, I am Guriel asking about gold. Oh, we'll get there, Guriel. You just hold on to your seat. We will get to gold. Absolutely, that's a biggie. That's actually what I've traded most this week, right? Okay. So going to dollar CAD. Okay. As I mentioned, crude oil, kind of thinking that it topped, right? It doesn't mean that petrocurrencies have to also decline, but I don't know, it's a headwind for them, that's for sure. So when I look at dollar CAD from a longer term perspective, one, we've failed into this level here. That's Jan 2020. Excuse me. 29.50. We failed there twice. However, when I look at price action, really for the last 3 weeks or so, right here, it doesn't really look that bearish to me. I don't care the fact that we're at resistance, whatever. You know, so if you break above this, I would have to think that it resolves higher from this little corrective sideways movement. And that's really all I'm going to get into. I suppose there is a channel here that you could trade on, right? This is the channel from the lows back in May. It's not especially clean. I mean, the support down here was great, but you don't have a lot of clean touches within the channel, like the center line and all that stuff. Frankly, I think that there's some CAD crosses that might be better to play, like CAD yen. We'll get to that. Ugh, excuse me, need more coffee. Yeah, so CAD yen's one that I think might be better to play. And let's move in that direction. So let's go to dollar yen first. Okay. First, I will start with the short-term chart. Now, notice that I have this pitchfork drawn, and I'm kind of, what do you call, kind of jumping the gun here because we haven't traded to the center line yet, right? So this is not confirmed by any means. However, I have it there just because it intersects some big levels and it looks sticky. I'm going to get rid of it right now. I'm going to go to a daily chart. All right, so two things. One, we've continued and have been since November trading around 115.50s, right? Recall that that is the 618 retrace of the decline from June of 2015, okay, back to June 2016. It is interesting that dollar yen has held up so well, given the recent strength in gold. Historically, gold and yen have traded fairly close. Now, interest rate situations certainly are changing, and that could certainly be part of it. But my guess is that as other countries' interest rates continue to, increase, in Japan, well, and it's dependent upon Japan staying low, right? The idea that being, gold and yen basically being, zero yield assets, that's why they tend to move together. So if you look at this, just scroll out. You've got the 618. You've got channel. You've got these kind of three tops, divergence out the wazoo with RSI on the daily, blah, blah, blah. Looks very toppy to me. We did have a short, or we are running a short off of this. This is, I'll show you, we had a short-term, really short-term chart here. Bring it in from the update. So this was from the 15th. There you go. Yeah, so this was the chart that we had here. Yeah, so this was back here. We had that. This is hourly. I don't show a lot of hourly charts in my updates, but there's a time and a place for everything, right? So it was just so clean that it needed to be shared. So here we got 1, 2, 3, 4, 5, ABC, blah blah blah. Take the short, call it a day. And now we're just kind of sitting here with a short and a more or less break-even stop, and just kind of wait and see what happens. So, even if this wasn't the top, you would think that you'd try to go for 1450, which is 2 equal legs. But really, the level I'm looking at is right here. I'm looking towards, as an initial test at least, 113.93. That is the close of January 24th, which is the low day of this move. And again, that is daily reversal support, right? It's one of our tools that we like to use. So intersects with the line off of the latest lows. So that's that. Not really much else to add there. Okay, so why don't we go and take a, there's a couple crosses, non-dollar crosses that I think are interesting. Euro yen is one of them. So here's what appears to be a triangle from the June high. So it's like we're going on like 7-8 months here with this contraction. And that means we could really break either way. So yeah, continue to focus on this. We also had, when did we have a Euro Yen chart? Back on the 14th, we had a Euro Yen chart. That was last Monday. Yeah, so here was the Euro Yen chart, right? We had a 5 waves down. We looked for a bounce. We looked for us to top and then roll over. And lo and behold, this is what happened. So recall that 618, and guess what? We went like this, ding, ding, and here we are. So we're in consolidation mode here following this nice little drop. Really, we're looking towards at Euro Yen now. It's really perfect. I mean, we're looking right down towards 128.80, which is 2 legs down, which intersects with this lower trend line within this consolidation. Okay, so let's get fancy and detailed and see if we can see if there's any sort of channel here that would be interesting to play with. That's a little steep, so we're probably going to go with a shift fork here, and that's a little more like it. Okay, you can see, look at all the trading and all the bouncing. In fact, we just did bounce on the center line. Okay, so this is a this is a short-term idea, but this is this is something you could trade. One, if it bounces, look for resistance up here, probably about 130, 130, 130 or so. If we break down, then you have, this would be a very short-term trade, but you would look for a break, a rebound for resistance to be where former support was. Okay, again, it's not the absolute level, the horizontal level, it's the slope level, which in this case is the center line. All right, and then you'd look to take that down to the target of 28.80. So it's just a good example of a trade setup here. Nishan asks why Kiwi Pound Aussie is not following SPX. Look, man, they're all different assets, right? Analyze each asset based on its own technical merits, right? If everything was the same, well, that would be a really boring world. So no, they're all different things. All right, moving on. Okay, so yeah, Euro Yen, interesting short-term chart and opportunity there. Another one, Aussie Yen. Okay, so we have a channel. We reversed at the center of that channel. We found resistance at the top of that channel a lot, like for the last week straight. We found resistance the last 3 days at the close of the high day. And we were putting in some bearish looking candles here. So Aussie Yen, I kind of like lower now. Yeah, I'll leave it there. I don't know. I like Aussie Yen short, stops up here. And I guess that will bring me to S&Ps, going from kind of one risk barometer to another. So, all right, a couple things to remember here. Let's look at NASDAQ futures. NASDAQ futures, one, channel. We topped at the channel. We broke the channel. We came back and failed near the underside of that channel. We've also failed at 2022 VWAP. That does not sound like a bullish thing to me. Actually seems quite bearish. S&Ps. Well, hell, let's go and look way back. S&Ps, 2009 channel. Draw a line. This channel is defined by lines off the highs. All right, back to 2010, May 2010, before the flash crash back then. And yes, I was trading back then too. I remember it well. Actually trading, then I think I went to Cape Cod the next day. Anyway, look at the top. Look, bottom line is we topped on it. Every time you've topped at that channel, at some point, you know, with a depending, you know, when, but at some point you've made it back to this line, this kind of center line, you know, which again, depending on how fast you get there, is it's a ways, you know, lower. So we topped on it, right? Topped where we should have topped. If I zoom in, we had a sharp decline. We had a big rally. We failed, excuse me, at the 618 retrace twice. Again, those things don't seem bullish to me. So I would be thinking that you're going for a test of this Jan low and then kind of see what happens. I mean, if you get something real nasty, like a real nasty flush to the downside, also put it this way, think like in more general terms, like rather than trying to think, just think, is this bullish or bearish? Like, did everything I just described, is that bullish or is that bearish? Like, you know, the NASDAQ failing where it did, S&P, you know, tumbling from really, really long-term resistance and then bouncing and failing the 618. And oh, by the way, there is this look of a head and shoulders, right? You know, everyone's kind of been pointing that out, but it's there. Okay, you can't deny it. And this is a big level to pay attention to as well. So like if we do start to really flush lower, you know, you start getting real panicky with the market. Pay attention to the line here that goes back off of these highs from Jan 2018, all right? So it's the magenta line here, Jan 2018, Feb 2020, and then look at all the things we cut through here, right? It's a great pivot, you know, and that's going to be low. That's going to intersect about the May low from last year, you know, and think about that. It's not that bad. Like, you know, May low, it's like a low. It's not even a year ago. I know the market's supposed to go up like every day, according to, you know, modern, you know, theory here, I guess, but it doesn't work like that. In fact, there actually bear markets do exist, believe it or not. So if that's where we're going into, I don't know, pay close attention to that. And that's about all I've got on the equities. All right, so let's go to some commodity stuff. I know everyone wants to look at gold, and who doesn't? So real quick, this was the longer term chart that I published right before the breakout, actually. And yeah, thing of beauty. So we broke out 1920, huge level, okay? A couple reasons why. One, it's the high back here from June of 2021. Two, it's actually the 2011 high. Three, it's the 618 decline from the high back here in August of 2020. And that brings me back to something interesting here as well. So like, look, gold broke out. I'm bullish, okay? I've been long gold for a couple months here. It's worked out great. I would love it if it just continued to go up and up and up. However, I realize that is, there's always a possibility that doesn't. So, be aware of levels where things might change. Okay, and one of those levels is the 618 of the range, or the decline from its all-time high. And just like back in 2011, that's where we failed, right, for the most part. So, am I saying that's going to happen right here? I have no idea. But my point is, if there is trouble in gold world, if we are going to fail, right, and if we're not going back to all-time highs, then a very likely place for us to fail is 1920-ish. That's all. So, yeah, pay close attention. Okay, in the meantime, oh, by the way, it's also the channel here goes back to this low from September. In the meantime, 1877 and 1854, high here, centerline here, are going to be levels that you should pay attention to for support. And man, we had a good one this week. So this is gold, and look at the center, look at the channel, look at the center line. It was resistance. We pulled back. Remember that little shakeout on Tuesday? Look where we reversed higher from. I mean, beauty. And yeah, we had that in our update on Monday, the day before it happened, right? Right here. Rip. Wrote, if price pulls back, support should be 1842, 1847. We pulled back, and the low was 1840, 460. Okay? My point is not trying to just, say, wow, this analysis is totally awesome. What I'm trying to tell you is that these are repeatable behaviors in a market as far as breaking through center lines and pulling back to them, right? And it's a solid way to kind of trade breakouts. Look, there will be times when a market breaks out and never pulls back, and it just goes and goes and goes, right? Those are rare, but they happen. More often than not, you will see a market break out, shake out, and the shakeout tends to end, at either the center line of a channel or the median line of a fork, or the center line of a fork, whatever you want to call it. Center line and median lines are the same thing. Okay, so again, they happen all the time on all different time frames. So it's just it's a very useful setup, and it's a very good description, I would say, of market behavior. Okay. Let's look at silver, then we'll look at crude oil, and then a couple cryptos, and then we'll call it a day. Okay, silver. I've got a really short-term fork in here. It's, not all that important, frankly, but been following it. So all right, silver. We've got the high back to February of 2021, right? And this is something, I wrote this last night, something to keep in mind when it comes to gold and silver, is that silver's really lagged. Like, gold's breaking out, right? Silver is not. Silver has been nothing but a contracting triangle, kind of a mess of sorts, really since September. And that is somewhat concerning, right? Because as a precious metal bull, if you will, or a gold bull right now, and I could change tomorrow, I could turn gold bearish at 1920 if we get the right reaction. But you want to see silver kind of lead gold, in quote unquote real bull markets in precious metals, the silver gold ratio does tend to go higher, right? The beta on silver is more, tends to go up faster than gold goes up when you have a real bull market. It's actually similar to Aussie and Kiwi, right? In real big inflationary kind of commodity bull markets, you tend to see Aussie actually go up more than Kiwi does. In fact, I could show you, this is pretty wild. Let's do this real quick. Let's see. Let's look at silver gold ratio. Okay, look at a weekly chart. All right. Okay, here's that. Okay. Oh, this doesn't go back as far. I don't know. I wish I had more historical data to show. Oh well, no big deal. Okay, so we're just not going to do that right now. Let's go to, where were we? Silver. All right. Anywho, silver. So here we are. And again, silver hasn't broken out. I'd like to see that happen. If we're going to really rip higher in precious metals. But two levels to pay attention to, one like 24.25. The big level is near 25. That's where silver really tests its breakout. Until then, really not a whole lot to do here other than watch it. I would say 23, to 23.10 is support. Should we trade down there, or should be support if we trade down there and you want to see a hold, but that's about it. We had a question here from why you place trade. Do you watch 5-minute candles? No, I do not. I typically will put my orders in at the end of the day. So like I do my analysis typically towards the end of the US session and into early Asia session. And then I usually don't place trades at market during the day. I usually put my orders in for the next day. So I'm not really watching any chart when trades are triggered. It's just the order is where the order is. And, people forget, or for some reason they think that watching the chart on a 5-minute candle or whatever is going to change the outcome. If gold is, or if silver's trading at 23.96, it's trading at 23.96, whether it's a daily, weekly, monthly, 5-minute, 1-minute, hourly, 4-hour chart. The price is the price, right? And support is support and resistance is resistance. Doesn't matter what time frame you're looking at. So yeah, I don't recommend, everyone's different. I get it. Like, you got to do what works for you. But yeah, do my analysis at the end of the day, and then I put my orders in. All right. Let's look at crude oil. So we put out a note, whatever day this was, Monday. Yeah, it's Monday. Here you go. Monday. Crude is pressing against the line that connects 2021 highs. This is simply the top of an expanding wedge. Some may call it a megaphone. Volume has picked up the last 2 days, indicating possible upside exhaustion. I'm on reversal alert. Guess what? Crude reversed the next day. And I do think that we are reversing lower or topping. In fact, if I put in this weekly chart, then you can see we have a little bearish candle here. Nothing crazy, but it is a bearish candle. Guriel asked, how long are you holding a trade? Well, I can tell you, I have my trade stat. Now these are, I just put these in as stats so I can know. How come I don't have the time in here? What is happening? Time. Hold on here. You know what? I'll tell you exactly. All right. So how many days? Where are we here? Well, I have to, okay, I don't have this all figured out right now, but I can tell you end of 2021 was not good. It was brutal. Still ended up with a winning year, but it was like I lost for 2 months straight. Let's see here. Average winning trade time last year was about 7 days. Okay. Average winning time in 2020 was about 5 days. Average in 2019, about 5 days. 2018, about 3 days. 2017, 3.5 days. Depends, right? Average 2016, about 5 days. I mean, so it really depends. But yeah, between 5 and 7 days, it appears as an average winning trade. And that might not be like the whole position either. That might be like a part of the position. So that to answer your question. Average losing trade is much shorter time duration. So average losing trade, if we go back to that, average losing trade, about 2 days, 1.5 days, 1 day. So yeah, it really depends. Okay, so yeah, oil, I like it lower again from the top of this this line that crosses all these highs from 2021. And we're coming up on the first kind of important spot, 88.5. Okay, see how market responds there, but yeah, I don't know. I like crude lower from here. That's about it. Okay, a couple cryptos and then we're done. All right, so Ethereum. Remember, I had a crazy call, and calls are all BS. We all know that. But was that we were going to trade down towards about $1,000 in the first quarter of this year, and then go higher. So we're kind of running out of time. But this is a pretty, I don't know, it's got a bearish look to it. I mean, you've got this double top looking thing, and then you've got kind of this rounding head and shoulders top with a neckline that is downward sloping. So I don't know. Ethereum doesn't look good to me. Looks bearish. I'll leave it there. Bitcoin, get a little more specific in terms of our analysis on this. So one, we have a fork and we nailed the center line, right? At the low, day of the low. We bounced. I said we were going to bounce. We did. Zoom on in, and we do have something to work with here. We've got this line off the lows. We broke it. If we bounce a bit more, I would watch for resistance right here. Underside of this red line, which is more or less going to intersect with former support here. So, you know, watch for resistance at 41.7 and change, whatever that 41,760, something like that. Okay. And that's why I would look for to take a short here. So I do like Bitcoin lower, and now you've got a decent setup that's taking shape here. Okay. Alrighty. That's it. Good review there on everything. And before I go, hold on here. Before I go, I'm back. I think you can see me again. So before I go, just a good time for a couple announcements, actually. So one, we are looking for profitable traders at Scandinavian capital markets. Okay, so we have launched a new version of our prop trading program, and we're funding up to $1 million to traders, given that you pass our assessment. Okay, so no monthly fees, no constraints, just trade, get funded, that simple. So check it out. You want to learn more about it. You really want to take your trading to the next level and become a money manager, not just a sit-at-home trader. Go to scandinavianmarkets.com/get-funded. And also, there is the Traders Expo in Las Vegas next week, and I'm going to be there. I'm not going to be speaking or anything, but I am going. So if you're there, stop, say hi. I'll be around. I'll be walking around talking to folks and just enjoying Vegas. And I'll actually be there. Happen to be there during my 40th birthday. That'll be fun. All right. So yeah, if you're there, say hi and let's chat and talk markets, talk a little shop. Okay, that's it. Again, Jamie Saettele here, signing off for SB Trade Desk and Scandinavian Capital Markets. And have a great weekend. All right, bye.